this is a breakout session. So the idea is like for this to be more engaging when we have our morning session on stage. So if you have any comment, question, and so on, please manifest yourself by either raising your hand or shouting. And I'll take your question. And we'll also, all offer some Q&A at the end of this session. All right. So before we dive into one of my favorite discussions, let's align on definition and what we mean by reaching the last mile. Because often I've attended roundtable where what we mean by the last mile was extremely different. And sometimes reaching the last mile meant reaching a big banks, which is not the case at all in our situation. So in this context, what do we mean actually? It's about ensuring that anyone, anywhere, can receive funds seamlessly, quickly, and affordably, whether the sender is in the same market or another country or jurisdiction. And okay, second term we need to align on, because we always have I would say different meanings sometimes against this term. Interoperability. So when we discuss about interoperability, in fact, within the I've noticed it because when I joined the Mojaloo community, interoperability was what I would call vertical interoperability. So it is about creating a single venue where any type of DFSP can join the network and able to offer instant payment. But where I came from before, working in the financial services industry, interoperability meant actually something else. It meant money flowing between networks seamlessly. And so that's what I would call horizontal interoperability. So vertical interoperability, horizontal interoperability, a slightly different concept. Okay, so now that we've kind of agreed on terminology so that we can all understand each other when we talk about this concept, I'd love to introduce the stellar panelists that are on stage. Abhishek, Sita, Jedida, and Joanna, would you mind to quickly introduce yourself and your organization?
Yeah, of course. Do you have the mic? Yeah.
You can use this.
Okay.
Hey, hi all. This is Abhishek. I largely come from a background in the domain of consulting and financial domain. And from last 1.5 years, I'm part of an organization called Finternet. Shall I give a brief about Finternet right now? Yeah, thanks. So I'll quickly give a brief background about what Finternet is, what we are building, and why we are building. So basically, the team build digital public infrastructure, which currently issued identity to 1.5 billion population, payment system, which is used by 700 million people every day, doing 500 million transactions per day. Then, open finance system, then verified credential system. And then the country has various other systems like capital market, land registry, motor vehicle registry, and things like those. So what we realized that these all were very much purpose-specific, sector-specific, kind of a ledger system. And when you need to connect with each of them, there's a tech team which will be sitting and which will be connecting with each other. And if you need to come for a cross-border, so for an example, a bilateral relationship between one country to another, say for just money, it takes at least 2 to 5 years. So now think of 5 countries, we are talking about just money, 190 into 5 years or 4 years. It will not going to happen in the lifespan of the people sitting in this room. So, and then we are talking about just money. Then there are various identity, there are assets, there are credentials and things like those. So that is where we realize that we need a system which is very much agnostic to any purpose, how the trust can be framed during the flows. So what we are really chasing toward is how verifiability can be done, whether it's domestic or cross-border, and how transactability can be enabled, ensuring the regulatory rules are embedded during the flows, the user is empowered, and how the market participants who are engaged into the entire ecosystem, they have an incentive alignment to whatever they are building. So that's in brief what Finternet is. Yeah.
Thanks, Julie. So my name is Sita Lango. I represent Swift's interest in the East and West Africa, based here in Nairobi. So I'm sure most of you know what Swift is, so I'll not bore you with the definition of Swift. However, I'm quite interested in having this discussion because there's a lot of, we're speaking about interoperability and system agnostics, as is just said, and I think that's one of the key elements when it comes to achieving interoperability. So looking forward. Thanks.
Thank you. I feel like I have introduced myself several times. My name is Jedida. I am with the Comesa Clearing House. Our mandate as a Comesa Clearing House is to facilitate the smooth transfer of payments and settlement for goods and services across borders within the Comesa member states regional economic community. So happy to be here, Julie. Thanks for invitation.
I think this may be my third time introducing myself as well. Joanna Wisniewska. I'm an associate partner with Glenbrook Partners. We are an advisory and education firm focused on all things payments. I have primary responsibility for leading the practice focused on financial inclusion, and we have been a partner to the Gates Foundation on the Level 1 project. Thanks.
Thank you for introducing yourself and your organization. Okay, so before we basically I really love this morning what was said on one of the panel, one of the last panels saying like to achieve a vision you need to know two things: where you stand and where you are, where you stand and where you want to go. And so on where we stand. Actually, it's interesting, and you referred to this as well, Joanna, this morning, that making cross-border more seamlessly has been a G20 priority since 2020 with the Financial Stability Board tracking progress against key performance indicators for cost, speed, access, and transparency. And this morning, you also referred to the fact that earlier this month, the FSB published its latest update against the KPIs and the result. So, if I recall correctly, it was also on one of your slides that the data shows that Sub-Saharan Africa and South Asia continue to lag behind in the speed of wholesale cross-border payments. I think he was using SWIFT data, if I'm not wrong. And interestingly, Sub-Saharan Africa remains the fastest region for receiving remittance, but costs remain high, ranging between 0.1% to 1.3% among the amount set, disproportionately affecting lower value payments. So the report attributes high cost and slow speeds to factors such as, and let me quote the report to give it justice with my French accent though, heavy reliance on USD cash, weak competition, limited direct access to payment system for non-bank PSPs, and burdensome reporting requirements. The limited presence of financial service providers in rural areas, coupled with a strong preference for cash, hinders improvements in remittance speed, requiring receivers to travel long distance. In addition, a lack of documentation and comparison tools restrict access and choice for underserved population. Again, I'm quoting the reports, these are not my words. And in fact, this is something we've been discussing extensively, I think, within the foundation, that I feel that, and not only me, the foundation overall, that these figures that I just mentioned actually may understate the real situation, as often there is sharp differences between what happened in the urban area and the rural area, and the numbers that are being looked at are average cost within the country, average speed, right? So I'd like to basically now ask the panelists for their thoughts on these numbers, and also what they've been trying to do to create more interoperability and insistence and effectively meet some of the KPIs that have been set. So Sita, I'd like to start with you. So SWIFT recently published as well, before the FSB updates, to be fair, I think the report was from September this year, a report called Spotlight on Speed, Why the Last Mile is the Longest. So could you share the main insight from that report and what approaches could help reach the last mile in a fast and affordable way?
Thanks, Julie. Yeah, indeed, Swift did a report on the speed and focusing on the last mile and why there is a lag within the payments landscape, especially when it comes to low-value payment. We did a research in most of the African countries, globally all the countries, but including African countries. And one of the things that I can say was clear within the report was operation-wise. So a number of things, and some of them might make the banks look a little bit suspicious, but it's just part of the operation and part of the activities that happen when payments are being settled and internal bank policy. So some of the factors that we saw when it comes to this was there's still a lot of manual interventions when it comes to payments within financial institutions, and some of it is because of lack of good systems. However, in some situations, it's internal policies. So very specific policies that mandate specific type of payments to require manual intervention for various reasons based on a specific institution. The other reason for slow payment that we also saw in the report is because some institutions, they have internal policy that mandates payments to be handled in a certain way in order to maximize returns on Forex. Because they deter from same-day settlements, because when it gets to a certain particular time of the day, then they are not going to go with prevailing Forex for that day. It has to be pushed to the next day, and someone needs to come and get approvals for that payment to be processed. So there's a lot of interventions which requires internal policies or internal payment processes that contributes to this. The other aspect, of course, is when it comes to, and you've just said, the heavy reliance on currency, on the dollar, these are things that we cannot avoid. And I usually say, when it comes to, we talk about de-dollarization. It's good on paper, very difficult to actualize. And someone will say, oh, come on, it's so difficult to actualize. It is, because when you look at our local currencies, the volatility of our currencies is extremely high, and some of these institutions, they don't have enough reserves by themselves. So we have seen the collaborations that is happening between institutions like Tunes, Therapies, the integrators, what you call the integrators, which are trying to facilitate some of these constraints that are causing delays within the last miles. So institutions that cannot be able to establish good relations or establish relations in some corridors, but they still want to attract traffic through those corridors faster, because ideally it will be slow because they have to follow a quite tedious process to be able to process payment from specific corridors. But now with these aggregators, the process becomes expedited. There is pre-funding of these dollars accounts or pre-funding of these accounts, deterring them from establishing relationship with every corridor that they have to. So reducing in some way the time taken in order to send payments or receive payments from these corridors. But lastly, I'll also want to say, in some situations, we also see regulation or the regulator impact when it comes to cutoff times. So we see delays in payments. Payments received within a certain particular time of day cannot be processed that day. It has to be moved to the next day. I know a lot of economies are talking about 24/7 economy, and most economies are trying to do all they can to fast track 24/7 economy, and that's an awesome drive. But also there are constraints that there are loops they have to jump through to be able to achieve that. So at the moment, that is still a constraint when it comes to faster payment. Yeah.
Thank you. Thank you for all your insight. And in fact, can I turn to you, Jedida, as well, because you're leading the implementation of a regional instant payment system across the COMESA region, right? And I think Sita mentioned some of the challenges that you're facing in the corridor, such as FX, currency constraints, and also Sita mentioned that all these economies are trying to go 24/7. Well, this is a distant period system, so it is 24/7 as well. So how do you basically, like, you know, manage some of the challenges that, like, Sita mentioned?
Okay, thank you, Julie. And as I was listening to you, I was saying, you're actually really answering the very questions. The report was highlighting the very issues that we face as COMESA. The data that, Julie, you've just presented just now, those are the problems we have. And if you watched the video we showed earlier this morning, the reason why our trade across borders has become such a challenge is because of these problems. Number one, currency. For someone in one jurisdiction to go to another to trade or to buy or to make a payment, you first need to convert your currency to the other one, to the dollar, sorry, and then convert from the dollar to the currency that you need to trade in, and then convert back. So you're having a lot of costs when you're doing those conversions. Now, secondly, with this last mile challenge, use of cash is still quite a problem across our borders, especially border points. It's still quite a challenge in rural communities, even if we are not speaking about cross-border. And that speaks to the report that has been published before and the FSD report. Now, what is the DRPP trying to do to address those challenges? Number one is to say our system will be able to then allow women, the youth, MSMEs to transact in local currency. I must say yesterday, something that Joanna said is, if you make the system address the challenges of the least included person, you've actually solved the problem for the entire ecosystem. And so by making it a local currency enabled system, it means that even the bigger trades that were doing the US dollar settlement payments will be slowly converting to being able to do their local currency transactions for the region. I'm not talking about on a global scale. That's number one. Number two is making it affordable. And the transactions costs that are being quoted on the report are so huge. Currently, you find that some of the cross-border transactions can cost as much as 8%, and this is according to data that's been published. We, as a DRPP or as COMESA, our aim is to not be more than 3%. Of course, we are working with much lower figures, but to just be conservative, we will try and we will make sure that we do not exceed the proposed or recommended 3% threshold. That's the issue of payments, of costs. Number three, in trying to make sure that the DRPP is able to reach the last mile, is the issues of governance. Because like has been said earlier, and the beauty of having panels in the afternoon is that you can ride on presentations that were made earlier and a lot of points made. You can have a very beautiful system, but it goes beyond a system. It's getting adoption, getting the user experience to be pleasant so that the system is used and you achieve what you're looking for. So in terms of governance, is to say that people need to be able to trust the system, and if you have the blessings of a central bank on your system, or they have said this system has got oversight of the regulator, there is trust in that system, and it will actually reach the very last mile of the system. So that is DRPP, that is what we are doing to address those challenges.
Thank you for this. And you mentioned governance, right, which was one of the principles discussed this morning when you were presenting the cross-border L1P principle. I'm conscious that perhaps not everybody has attended the great presentations that you gave this morning. So perhaps, Joanna, would you mind to give a brief recap of some of the core principles like you explained this morning, and also a few examples of cross-border deployments that are meeting these principles?
Sure, would be happy to without going through the presentation fully itself. I think a number of things that have already been mentioned really highlight the problems that we're hoping with some additional guidance and market examples, progressively can be addressed. These are really, really challenging problems to address. So some of the ones, just maybe naming the level 1 project principles themselves, there are 7. It's instant payments, which captures one of the really important practices in the context of cross-border payments, which is settlement. Interoperability is really the subject that we're talking about here, and ensuring that payments are seamless. There's a statistic that we quote in the full report on cross-border payments that suggests about 14% of cross-border transactions actually fail, and the cost of remediating failed transactions is around $12 per transaction. That's absolutely massive. So there is real cost to the system. That then is, passed on to end users. Inclusive governance is certainly one. There are a number of elements that go into that. Jadida talked about that when she introduced the COMESA project, and just now, ultimately, another principle is low fees for end users. That's ultimately really the goal of all of these kind of structural changes and scheme level and platform level changes that are needed. But the ultimate goal is really low fees for end users. So that's a critical element. An initial kind of step towards that is reducing the cost in the system, in the scheme, in the platform, and the costs that the actual participants incur, with the hope that gets passed on, or rather lower fees get passed on to the end users. Safe payments, Jadida, you mentioned trust. Trust is absolutely critical. Certainly it's critical in domestic payments. It's even more critical in cross-border payments when you're talking about fees that are higher. We know from our work with L1P that in some instances, even a single instance of an individual losing funds can mean never using digital payments again. That's definitely something that we want to avoid. And there's quite a bit that goes into the safety of payments. One of those, which I think is particularly critical, is transparency of fees. So the end user actually knowing what the cost of the transaction will be. That's a really critical element. And there are, for those of you who were in the session earlier, I talked about a proposed disclosure framework that we are promoting. And again, COMESA is already taking steps in that direction. And finally, capabilities that are provided at the central scheme and platform level that can help, that are complementary to what individual institutions are doing in terms of sanction screening and risk management and fraud detection. Complementary services that are done at the top, at the scheme level, that can help really raise the bar on fraud mitigation for all DFSPs without having to make those investments individually. So, really all of these get to the question of cost. I think COMESA is a really great, cost and fees, and COMESA is a really great example of taking really tangible, practical steps towards achieving those. I also mentioned this morning the Buna regional system for the Arab region, which settles in 4 different Arab currencies, as well as USD and Euro. But one of the innovations in that system is that the settlement actually takes place in these pools of those foreign currencies, reducing that need for that third currency to be part of that process. Now, I'm kind of making this seem like this is all, simple, like, oh, just do this and we're going to solve the problem. Obviously, these are very challenging problems to resolve that, many smart, committed individuals have been part of trying to resolve. I'm hoping that there will be some kind of an inflection point that really helps to get through these challenges that we've been talking about, for so long, right? I think it's time to address them.
Thank you, and it's interesting, right? Because for me, you mentioned, for example, transparency of the cost, and you could say as well, to some extent, transparency of the speed as well, right? Because there are some payments that you really need to be received quickly, right? I remember I remember a workshop a long time ago when working with some South European country, and they were like, "But Julie, you don't understand. No money, no honey. The ship is gonna left if they don't get the money right away, right?" And I think we are not there yet, like testing cross-border payment often. Like we even tested it together with Jedida, and the fees we didn't. None of us had transparency of the fees. I was a sender, I didn't have this right. So for me, it also like make me think. We discuss a lot about this principle on existing infrastructure. Actually, we could argue that the RPP is not yet an existing infrastructure. But if I look shorter forward, right, and in the what I would call the next generation infrastructure, such as the Finternet, where the idea is to take a completely different approach, leveraging different technology as well, such as like, blockchain and decentralized infrastructure. Could you tell us more about this initiative and its vision for inclusion? And like, if I go even a step further, do you think that the Internet would meet all of the principles presented by Joanna?
Yeah, thanks, Julie. So I'll give a quick background about, though I've shared a brief about Internet, but how the origin started. So obviously, the team was exploring rather than how to move from a purpose-specific infrastructure to a generic infrastructure. Think of like, internet for an example. Like, old days you have intranet kind of a system. Every company will have its own server, own internet, or own email IDs and all. And then if it has to connect with other, then the tech team will sit and going to connect. Now think of like internet, it's a public infrastructure, which most of the financial system today work, and we all are working on that. And it's a very universal and unified infrastructure kind of a thing. Now think of like WhatsApp. WhatsApp in Kenya is as good as WhatsApp in US or in UK. So it's a very generic infrastructure. So that is how from that the idea came that how money can be money or anything which has an economic value, either identity, credentials, or money or an assets, which can be moved either domestic or cross-border in a universal, unified way kind of thing. And that is where a paper was written by Augustin Kastin. At that time, he was general manager with Bank International Settlement, BIS, and Nandan Elikani, who initiated the idea of DPI, started from India, and then which is used in many countries. And that paper got published in Washington, DC in April 2004. It presented in presence of Central Bank of Germany, Brazil, and Korea. And that is where the whole, various academic people, regulators, and market participants appreciated the paper, and they want that how this whole infrastructure come into the real life. And that is how, today we have a lab in US, Singapore, Switzerland, and India, where we are actively working with regulators on one side and market participants on other side. When I say regulator, it's bank, either money market or capital market regulators. Now, I haven't really, the report which you are referring to, the report which Sita is referring to, I haven't read through this report, but when I was hearing about you, from you people, like it was really giving me a goosebump that, oh, really these all problems we are trying to solve on Finternet. So what largely we are trying to do is we are giving an agency to the government, agency to the user, agency to the market participant. So like the user or the government will define what is the rule on which I want to transact for my citizen. User will decide that on what terms I want to control my assets, my identity, and how I want to share it to the third party. So we are going back to the old age of, the cash system. Like cash, I can transact with you in 2 a.m. in the morning or 10 a.m. in the morning. It's like a same kind of a thing. So that's where we conceptualize that how we can go to the last mile, which is one of the topic as well, that how we can give agency to the user, and user can define the rule of their own transactability, ensuring the government rules, the sovereignty risk, or the capital flows are embedded into the flows. That's how the idea of what we are chasing toward. Now, there are two big technology shifts which are happening. So one is in the area of agentic commerce, which really how users can be empowered with from a time aspect. So like, When I came to Kenya, I filled a detailed form. Most of the form, the information, I'm sure many of the people who have traveled from abroad have filled that form. And most of the information was there in your mobile or laptop. So, but you know, you need to pull out the laptop, you need to pull out the form and fill the details. But think of like a wallet infrastructure where, you know, on one click, it pulls the information and just I can review it and I can submit it. That's what the world is going toward in the agentic commerce side. And the second component is tokenization. So tokenization is, think of like a bearer check. It's a digital bearer check as good as cash. So what Shita was referring to, you know, because, okay, the SWIFT can send the message real time, but, you know, some correspondent banking, you know, network is there, which may be in a different time zone, or they may have a holiday on that day, or they are not working on that day, and that money will not move. And the programmability cannot be embedded. Say, for an example, I you know, transact with you that, okay, I'll give you $10 or $15, but subject to you treat me in a restaurant, and if I like it, if I like above 7, this money we can share, otherwise we can't share. Now, these kind of programmability we cannot do in a digital transactability because the money is not moving real time. You are based in, you know, Europe, I am based in Dubai, my bank account is in India, and the transaction cannot happen real time. That is where what we are chasing toward in agency to the user. From my wallet, I can transact with multiple user in a programmable way, the way I can define, and it's in a tokenized format, which is like, it's as good as a bearer check. So the transaction can happen real time with certain rules embedded into it. So these are the two, and obviously there will be concerns on the privacy element and data sharing element. So there is a good advancement has happened in the technology cryptography domain, and all this has been solved in a different world. We are just trying to pull that how this can be solved in this regulated framework as well. That's what the idea is, so that, you know, all the regulatory concerns like related to capital flows, related to privacy laws, related to, you know, sovereignty risk, all those are embedded into the transaction. So that's what we are chasing toward. Yeah.
Thank you so much. And yeah, a few interesting points for me, like as you are explaining the protocol, I don't know, it kind of reminds me what we have on Mojaloop, the agreement of term, but instead of being between DFSP, I felt like it was back to person, right, to your analogy of cash. And you also mentioned something interesting, which is on the SWIFT network is a messaging network, and so you don't have the settlement part. Well, there have been some announcements lately around basically, like, you know, SWIFT exploring as well, like a shared ledger infrastructure. So could you perhaps provide more information about this?
Interesting, and you literally putting me on the spot here with the ledger discussion and all that. So those are, I think, with the mandate that SWIFT has been given, basically is to, given the global dominance that SWIFT has, especially when it comes to cross-border payments, we are present in 220 countries, including territories. Before someone tells me there are only 197 countries, so I'm talking about including territories. So globally, we have well-laid infrastructure. So what SWIFT is looking at, and that's what we have been doing, I think, over the last few years, culminating to this year when the ledger was announced, is trying to figure out how can we facilitate transaction or facilitate payments so that some of these infrastructure, individual institutions don't have to build themselves their own platform from scratch. How can they reuse SWIFT's existing platform? Because all banks have SWIFT, if I can say that. I'm subject to being corrected if a few banks here out there don't have SWIFT, but basically all banks have SWIFT. So it will be easier if, for instance, they come with a new, let's say, application or solution that needs to ride, let's say, on a specific technology. And SWIFT, as a global platform provider, can be able to provide that interconnection so that every institution don't have to implement their own platform, bring it to the market, and everyone who adopts that technology, they have to build the technology from scratch. So when it comes to the ledger, as you have rightfully hinted on, what SWIFT is doing is partnering with global banks. So we are not generating our own stablecoin, but rightfully, as you have said, we are maintaining the ledger. So global banks at the moment were invited to the table and accepted the invitation. We are working with them on the logistics, on details surrounding how this stablecoin is going to look like, what are the schemes that are going to surround the trading or the usage or the exchange of all these stablecoin currency. So that is being discussed. However, SWIFT will maintain the ledger, but the banks themselves will hold the coin and they will facilitate transaction of the coin. Yeah.
Okay, thank you for your explanation. Okay, so I think like we discussed, I feel a few components that needs to be in place, like to be in the position where we create vertical interoperability, so allowing different type of DFSP located in across different jurisdictions to transact, right? And I think like a few of you mentioned like core banking system, for example, is one of the key things to have access to the rail, a certain level of security, or meeting some sort of regulation, being in a position where you can meet your regulatory requirement. But here, you all sort of, okay, except Joanna, but Joanna, like, you kind of have a global view on different networks, but you're all representing sort of different network, right? And
so we are partner to all networks. We are not agnostic.
Yeah, that's true. That's true.
Our aim is like to serve to 8 billion population for verifiability and transactability. So
yeah, you're the glue between network, right? But actually, like, I think for me, that's also reach a point, and Abhishek, you mentioned in your example as well, right? Like, living in Dubai, having a bank account in India, like, okay, SWIFT is a global network, but there is a problem of accepting all type of DFSP. I think for me, one of the questions would be, how do you create more interoperability between the network? And what we see today is a lot of regional initiative. You have a lot of regional initiatives in Africa as well, and I think there was a question as well this morning around, okay, you have PAPS, you have EAC, you have COMESA, like how do you practically, like, you know, create more technical interoperability? Because I think if we go into regulation and scheme, it's a full day, full year discussion. It's typically like the toughest part, but at least on the technical side, what do you think are the key elements? And on both networks, there is this concept of pre-validation of the transaction, right? I think the module, we call it agreement of terms, is sort of a pre-validation on steroid, because the idea is like to really connect with the beneficiary bank to understand what are all the checks that must happen of the transaction. But I'd like to gather your view of, one, like I said, what are the key components to establish more interoperability between networks at a cost that is low and a speed that is quick as well. And second is, yeah, your view on pre-validation overall as well.
So I think I can take it up. Basically, what is globally happening is there are various standards and reference and frameworks are being built. Like SWIFT is working on ISO 2000, 22002 something. Yeah. So, and obviously I know about we as a network, we are picking up the best reference standards and all that, how it can be engaged, so that this whole interoperability component can be reduced in fraction of, few hours or minutes or days, rather than, long bilateral relationship happens and long stitching happen of two tech parties and all. So we are globally picking up the best. So for an example, we are working with GLEI, which is a global legal identifier, which I think Mozalu is also working. So that SWIFT, for an example, building up a global standard for message passing and all, we are adopting the best of the best practices. So basically what we are doing is, there are a lot of global initiatives are happening to make sure that how interoperability happens in a smoothless manner, and we actively working on to embed them into the flows. So that's how the area of how we are.
Yeah, Julie, if you allow me to add, I think one of the key components or the common factor that you'll hear even as my fellow panelists are talking, when you talk about interoperability, it's all focused towards service delivery to the customer, to the last mile, to the customer. And when we talk about the increase in costs payment, when you talk about the delays in payments, not be able to deliver payments in time, and as you have mentioned, all this that is being done at the end of the day, you mentioned about different platforms. We have PAPS, we have Swift, we have all these siloed application, solutions. How can we achieve interoperability when we are so much siloed? I think the essence here, all these systems, if you keenly look at them, is trying to resolve a specific challenge within the market. It's all geared towards addressing that. However, interoperability is not lost in the chain. So when you look at PAPS working together with the banks, they reuse existing banking infrastructure. So the technology is there, the system is there, the platform is there, but at the end of the day, they're not forcing banks to implement a totally new infrastructure, a totally new leg. They are reusing, in some instances, they're also reusing Swift, you know, to be able to run the same service to the customer. We're talking about pre-validation. Right now, you find the conversation or the discussion within within a lot of these markets is how can we centralize pre-validation in order to ensure that the data is enriched within payments. So for Swift, we started with our own pre-validation system. Very quickly, we realized that these markets already have data consolidators. For instance, in Kenya, we already realized that PesaLink has an API integration with all the banks. So why do we need to implement pre-validation APIs in all these 40 or 50 or 60 commercial banks instead of centrally talking to PesaLink, who already have APIs with the commercial banks that can easily achieve the API calls, and then we can integrate with them, of course, with the authority from the commercial banks, and then pre-validate payments. So what I'm trying to say is that, yes, we have these siloed services that are being pushed within the industry, but the common theme here is collaboration. And collaboration is what is helping service providers, platform developers achieve interoperability. Because if you are going to stand by yourself because you want to capitalize on the market, that's when your service is going to be very expensive for the customer, very expensive for the banks or institutions to implement, very expensive to push it to the last mile. So collaboration cannot, you cannot achieve it without collaboration, and through collaboration we achieve interoperability. Yeah.
Thanks, Julie. Very much agree on the issue of interoperability. And on that, I would like to add, the whole point of interoperability is because there is no single system that will serve the needs of everybody. I don't know how to phrase it. But every consumer is looking for something specific in a particular system or a particular scheme. So our job as people in payments is to make sure that they all speak to each other, and our customers can benefit from being part of ours, and yet being able to then ride on another system that's there. So it's about fulfilling the last mile and fulfilling the desires of our consumers. And how do we do that? It's through standards. Swift standards, for example, which allow these systems to speak the same language, but they can then be customized to make sure that they fulfill legal requirements, the various frameworks for different jurisdictions. So it's about standardizing what we have. Now, on the issue of pre-validation, I got a very sobering figure from Joanna about failed payments. If 14% of cross-border payments are failing, I bet you it's not about the technology. It must be something else. And one of those things is the recipient has no account, or the details are incorrect. And what happens is, what you've said about how much it costs to return a payment or for a failed payment, it's adding to the very issues we are saying, that cross-border payments are costly. So if we have pre-validation and you're sure that that payment is going to reach the recipient because you've already checked that all the conditions have been met, then it helps reduce the cost of cross-border payments. Thank you.
Okay, we're running a bit out of time. I just wanted to echo something on pre-validation, right? And the concept of failed payment. Actually, I must admit, there was also that number that you shared, struck me a bit, right? because I do feel that if any market don't do more on pre-validation, actually this number will rise. And reason for that is the ISO migration was the first step of changing a data model, but then the second step was at different pace for every single market to introduce new data requirements. And so, for example, a lot of markets are looking at mandating the use of purpose code. So if you don't know what the requirement in basically the receiving market and that purpose code is mandatory, your payment will fail as well, right? And so I do feel that as we see more and more extra data requirement coming, if this won't be known by the sending market. So it means that the number of failed transactions will increase without pre-validation. Okay, so we are running a bit out of time. I'm just wondering if we can probably take one or two questions. Is there any question? I'm coming.
Actually, this is not a question. It's just picking up what Jadida was saying about the failures of payments. That survey says that 97% of payment failures are due to misidentification of the recipient of one kind or another. So, yeah.
Thank you.
Thank you. I have a question, and the question is to Jadida. Yes, you made some. I followed you in the morning. You talked about COMESA and everything happening in the region. My question is, when are the discussions on standards, for example, happening? Because I think that is a very key point that we need to talk about interoperability, especially in the region, because the specificity we have here is that, as somebody mentioned in the morning, you have some of the countries that are at the same time in the ESC and in COMESA, for example. If we do not determine those standards at the beginning, even the interoperability will be an issue. So I just wanted to know when or where are the discussions on standards happening in that specific context. Thank you.
Thanks for that. And Michael, thank you for the actual statistic. So when it comes to standards, it's not per se the standards of the DRPP, but it's what is already there. SWIFT standards, the ISO messaging standards, for example. Or for us to go on a platform that allows us to then custom build what we want, but on a baseline where we can all communicate, and that's the Moja Loop as an open source, for example. So the discussions are already happening, and like I mentioned, COMESA as an institution is already in talks with the EAC, with the Southern Africa Development Community, which is SADC, on how we can avoid duplication and bring our systems together and see how we can then say, what is it that we want to achieve as Africa, and how can we go about it without taking away the very people we are trying to include? Because if you come up with this humongous system at once for Africa, there are people you're going to exclude. So let us work with our blocks. My colleague said it very well. Get it right at the national level. When you go regional or cross-border, do it at a regional level, or trading block, EAC, get it right, SADC, get it right. And then let's come together and see how we can align those payments. But let's engage after this, and I think what I'm getting from you is that you want to join the DRPP, so you're welcome. Thank you. Thanks for the question.
Fantastic. So on this note, I'm afraid we'll have to close the panel for now, but thank you so much, all of you, for all your insight.